Hi, this is Kerry Artak with Wicked Stocks, bringing you an update in the IWM, and that is the most active, the highest volume ETF that is devoted to the Russell 2000. The iShares Russell 2000 ETF is the IWM. The Russell 2000 is an index of 2,000 roughly small cap American U.S. companies, and so very different than the S&P 500, the top 500. And the NASDAQ 100, which is more of a high tech or a tech stock index. It is, not impacted as much by AI and the AI sort of frenzy that's still occurring in the NASDAQ 100 in particular. And in fact, if you're looking at this chart, this is a monthly chart that goes back, over 20 years. And you can see that we're in this sort of wild swinging two-sided framework that goes back to really this rally started in November of 2020, and we've got a 21 high, and we've got kind of a 22 to 23 low area, and then we have this rally November of 24, and we've fallen back almost back to this channel bottom, as you may recall. I have provided IWM videos in the past. I just haven't gotten around to it in a long time. It's definitely due. I think it was last April that I provided the last update in the IWM. So we are in this wide range. These are two significant areas of resistance and support. We're not going to see them this week. We're not going to see them probably, I'm going to guess, through the rest of the year. Keep in mind, this is a monthly bar chart. So if we were to test 241.40, this channel top, that could take at the soonest 3 to 5 months. So yeah, potentially by the end of the year. I'll get to all that here. Let me just continue on. These are weekly charts now, and I'm going to kind of walk us through same exact formation we have, in the lower 160 or in the low to mid 160s base of long-term support. Same channel structure, but on the weekly chart. And the last time I provided an update in the IWM was when we closed above this channel top coming down, and that was the week of April 28th that set up a buy signal, if you may recall. And I'm not going to get into all the numbers and everything, but you can see the rally did ensue. And very recently, we did close below this 3-month channel bottom that is rising, as well as kind of a 6-week channel bottom that is more horizontal. We closed below both of them 2 weeks ago, and then last week we rallied to close back above them. That is not necessarily a sign of bullish continuation, but it does neutralize the potentially bearish dynamic that we saw playing out a couple of weeks ago. And so it is a bit of a mixed bag right now. There is no strong longer-term directional impulse that I can see. Even if we close back below these structures, I don't see that as a reliable sell signal. I'll get to that actually in a moment. But the question begs, will we rally back up into this zone? This was a significant sell signal back in February of this was February of this year. Then we had the buy signal that I just showed you a moment ago in April. But the 238.45 former channel bottom is a significant resistance area, and it does correlate over the next month or two with this 241.40 channel top. This channel top actually held nicely in November of last year. We pushed through it, but we never closed above it, and then we collapsed following that. I will add, both the S&P 500 and NASDAQ 100 have taken out their highs. We are now at new all-time highs, as you're well aware. If you follow my daily Triple Q and my daily SPY analysis at wickedstocks.com, you know exactly what I'm talking about. So there's that.
If you're finding value in this analysis, it's only a glimpse of what we offer. Your real trading edge starts at wickedstocks.com. Each week, premium members receive 2 high-probability stock picks. Each one comes with a complete trade plan, including exact entry, profit target, stop loss, and regular updates so you can manage the trade with confidence. You'll also get daily video analysis in the top traded markets, the SPY, the Triple Q, and NVIDIA, highlighting the key price levels, trends, and trade setups we're focused on. Whether you're day trading or swing trading, these insights help you zero in on the highest quality opportunities with clarity. Try it all free for 5 days. Cancel at any time.
But the IWM is a different index altogether. Once again, it's small cap, more susceptible, of course, to tariff a tariff war. Higher tariffs typically weigh heavier on the small caps for a variety of reasons. But the question, once again, with the technicals, will we see this upper area here? This is a weekly chart. Will we see this by the end of the year? And I think the answer to that is probably if we close above 225.69. We may see that this week. And there's nothing more than the high of this recent low. And I think just closing above that does indicate, yes, upward continuation. Now, if you want to use the actual high of 226.80, I don't have a problem with that. But I think you can actually play the long side, or at least exit any short position you may have in the IWM, meaning any out-of-the-money puts you may have bought, I think should be liquidated, or at the very least hedged by reaching for out-of-the-money calls. Because if we close above 225.69 at the end of this week, I would see this could be a 3 to 5 week blast. This could also take 2 or 3 months, but I would see that over the next 2 to 3 months or sooner, this 238.45 to 241.40 region, if we close this week above 225.69. Until then, we have the sort of kind of two-sided framework right now. Below 225.69, I could see easing back to this extreme rising channel bottom that is now at 207.55, and FYI, by the first week of September, will be 213.52. So the way I see, the month of August and through September potentially is this sort of two-sided framework in the mid-220s, 225.69, and presently in the 207.55, soon to be in the low 210s over the next 3 or 4 weeks. We could fill this area out for the next month or two before the market tips its hand in a respective direction. Once again, closing above 225.69, we have a 2 to 3 month or sooner objective in the 238.45 to 241.40 region. Now, if we were to fall back, and by the way, 207.55 to 213.52, it's a solid zone to buy into on at least a weekly, and I'm going to say a monthly basis. We can round out of here. We could round out of here through the rest of the year potentially, especially if after testing 207.55, we round up to then close above the mid 220s, then indicating upward continuation into the low 240s. But if over the coming weeks we close below that 207.55 formation, I would see within a 2 to 3 months 192.11. That is the high of the low. This is a significant low. This high of the low is a significant high of the low. This particular low was a reversal low. We put out a new low following that high from November of 24, November of last year, and then we closed positive on the week itself. And so that set up for this upward continuation. And then when we closed above this high, it was upward continuation. I can also take you back to this chart, and this was our clarifying buy signal. Just a couple of weeks later, after closing above the high of the low, we then closed above this channel top, which set us up, if you recall, in that video. One other thing is that if we do close below 207.55, there is, of course, the very real possibility that as, depending on what's going on in the market, whether the tariffs stick, whether they're actually, anywhere from 15 to 50% for many of these countries, whether that actually happens or not, I think we'll have a lot to say about whether we actually fall completely into the lower 160s in the IWM. Bottom line, if we close below 207.55, I have no interest in being long the IWM. If there's any position to be made, it is to the short side, expecting within several months 192.11, and potentially this particular break, and this was a significant break. Obviously, I don't expect this kind of a break. It could be a more methodical break like we saw, this from this November 21 high to the June 22 low. It could be more in this order rather than this aggressive sell-off, but nonetheless, closing below 207.55, I do think you can opt for, or at least anticipate the possibility of, the low 160s. Now, of course, on the way down, 192.11 can incur a decent bounce. That may be all she wrote. We could round out of here perhaps, but I do think that over time you must allow for the possibility of the lower 160s. There is also, a descending channel bottom in that vicinity that we could then anticipate as well if we were to close below this steeply rising channel bottom. But it is so steeply rising that I don't think it carries necessarily the full weight of a low 160s ultimate objective. I do think it actually is, quite frankly, a stair-step approach. So if we close below 207.55, and that is 213.52 the first week of September, that does carry with it the low 190s as a likely 2 to 3 month target. And if we close below 192.11, then yes, the low 160s likely within several more months, 3 to 5 more months of that. I'm pushing 10 minutes here. I'm going to leave it at that for this particular Russell 2000 ETF. That is the IWM update. Go to wickedstocks.com, by the way. Take advantage of our 5-day free trial. You'll get our daily SPY and our daily triple Q analysis and our 2 stock picks a week. I will be back, I don't know how soon I'll be back with the IWM analysis. I think it'll have a lot to do with whether we take out 207.55 to the downside or in the next few weeks close above 225.69. I'm going to leave it at that. You have a great day.